All right, gang, what we now want to take a look at is how does everything flow from a journal entry into a financial statement? And we want to take a look and make sure that we've mastered most of the most common types of journal entries they may ultimately try to test you on. So let's take a look at some scenarios here. The first thing we want to note is that when you have a journal entry, the journal entries will ultimately come down and they'll ultimately flow into the trial balance. And the trial balance can be for any one of the funds that are governmental, the general, the special revenue, the debt service, the capital projects, and the permanent fund. So it all kind of flows down into them. And then from there, it flows down into financial statements. And then from there, it'll flow down into worksheets for all governmental funds. We'll prepare working adjustments. Those working adjustments will be ultimately to make sure that the full accrual method is going to be used for the government-wide financial activity. So those are some of the fundamentals that you should be aware of. Now, let's go over some very, very straightforward, but very likely to be seen types of journal entries. Let's go over the first one. Greentown billed $1 million in property taxes to its citizens and anticipates $50,000 of the levy won't be collectible. So we're going to show property taxes revenue. This is an activity account, right? We're going to show receivables of $1 million, revenue of $950, and ultimately the allowance for uncollectible of $50,000. Property taxes represent an imposed non-exchange revenue that is recorded, recognized, when billed to the extent that is measurable and available, which typically means that it will be collected during the year or within 60 days thereafter. Our next item is Greentown collected $925,000 of the taxes so far. This is easy. It's debit cash for $925 and credit the taxes receivable because they've now been collected. Not a real challenging one by any means. Our next one is the town expects to collect $25,000 of its tax levied 90 days after year end. So in this particular case, we noticed debit property tax revenue for $25,000 and credit deferred inflows. Why? Collections that are measurable but are not available are recognized as deferred inflows until collected, which is generally within 60 days of year end. In this case, it was 90. This application of modified accrual accounting will ultimately produce a reconciling item with the accrual-based government-wide financial statement later on, which we'll see in a subsequent chapter. Greentown was deeply concerned about cash flow issues as it began its first year and elected to issue $50,000 of tax anticipated notes payable from future tax levies. So you debit $50,000 and credit the liability tax anticipated notes. Tax anticipated notes are always recognized as a current liability. While long-term debt is displayed as other financing sources, current debt is displayed as a liability. The next item is Green paid $350,000 in general governmental expenditures associated with the administration of the City Hall. Well, that's general governmental expenditures. And notice it's not expense, it's expenditures in this particular case. And we credit the cash for the same amount, the $350,000 that we're being told that was incurred. You'll note here payments of operating costs such as general governmental expenditures are recorded in a manner consistent with commercial accounting, which, by the way, when you have payroll, you would also accrue payroll at the time that it was incurred. Note the next item here. The next item is we had some public safety. And when it comes to the public safety items, what we're going to see here is we're going to see that Greentown paid $500,000 in public safety expenditures associated with its police and fire department. Those are just expenditures. And of course, we credited cash under those circumstances. The next item is going to be our capital outlays. And in this particular case, what we're going to see is the city entered into a lease for copiers and printers in the City Hall that totaled $20,000 and properly accounted for them. As far as we're concerned, it's a capital outlay and it's an other financing source for the, quote, debt proceeds. The long-term debt of the government, governmental funds do not record non-current liabilities. Recording requires recognition of the capital outlay associated with the lease and the funding of the outlay with other financing sources. effectively non-current debt proceeds. This application of the current financial resource measurement focus will ultimately produce another reconciling item with the accrual-based government-wide financials. The next item says the city was concerned about the first-year cash flows and staying within its means and liquidating land and building earmarked for parks and recreation. The city received $115,000 for the property, and it had a net book value of $102,000. Now remember, we're in the governmental funds. They don't even carry the assets. So all we have to do is debit cash and credit proceeds from the sale of land. The sale of property is purely recorded as proceeds from the sale. No recognition is given to the carrying amount of the asset on the city's subsidiary records, since no non-current assets are displayed on the governmental fund balance sheet. This application of current financial resources measurement will ultimately produce another reconciling item with the accrual-based government-wide statements. The next item is the city had open purchase orders associated with the purchase of police cars for $85,000. The city intends to honor the budgetary committed associated with these purchases in the coming year. So we'll debit unassigned fund balance, taking it out of the free unassigned amount and put it into committed. So essentially, if you'd had an encumbrance, you would have closed the encumbrance, and then you would have ultimately taken money out of the unassigned fund balance and put it into the committed. Open purchase orders associated with appropriations do not lapse, and if they don't, they are displayed as committed funds in the general fund. Our next item is the Green Town accounts, and this is in the special revenue fund, by the way, for $70,000 in gas tax collections in a special revenue fund. So in this case, we're going to debit the cash, and we have intergovernmental revenues. Collections of earned revenue are recorded in a manner consistent with commercial accounting in this case. The next item is, in December of year one, gas taxes of $5,000 were remitted to the state on the 15th of January. The state complied with statutory requirements to disperse funds to the city within 45 days. Notice it's due from other governments, so you're getting rid of, you have the receivable, and you have intergovernmental revenues. You'll notice revenues that are measurable and available, which means collectible within 60 days, are accrued as revenue in the current period. The gas tax revenue for the final month of the city's fiscal year are collected within 60 days and thus are accrued and recognized as revenue in the current period. The next item is the town paid $3,000 for minor road repairs in full compliance with the laws associated with the gas tax. Well, in this case, you have an expenditure. Notice again the word expenditure, not expense, and you credited cash. Payments of expenditures incurred in the current period are recorded in a manner very, very similar to commercial accounting, except for that term, it's called expenditure, not expense. And then Greentown transferred $60,000 into the debt service fund from the special revenue fund. Well, that's a transfer out. Notice it's not an expenditure, just transferring from one checkbook to the other and crediting cash. Transfer between funds are unique to the governmental entities. Transfers out are uses of resources that carry a debit balance and, from a bookkeeping standpoint, resemble expenditures. So this is all part of the process of demonstrating how the funds are prepared using this particular process.